Welcome! We've teamed up with the experts at My Tax Accountant for a really important look at how your money is now being tracked here in the UK. The tax rules for 2025 and 2026 are changing in a big way. And honestly, what you don't know could really cost you. So let's just dive right in. So let me ask you a question that might make you shift in your seat a little bit. Who is HMRC's biggest snitch? Is it a disgruntled former business partner? A nosy neighbor peeking over the fence? Maybe even someone you know personally? Well, the answer is probably going to surprise you. Because while, yeah, human informants are definitely still a thing, the biggest informant in this brand new era of tax compliance, it isn't a person at all. Stick with me here, because what I'm about to share could completely change how you handle your finances.
All right, let's start with that traditional idea of an informant, the whistleblower. The 2025 budget didn't just acknowledge them, it basically supercharged the whole system, rolling out the red carpet for them to come forward with what they know.
That's right. For those really big cases, we're talking where HMRC gets back over £1.5 million in unpaid tax. The person who gave them the tip can now get a reward of up to 30%. That is a massive financial incentive, all designed to uncover serious, high-value fraud. So yes, the classic snitch is being encouraged more than ever. But, and this is a huge but, as significant as that is, it's nothing compared to HMRC's new #1 source. See, this informant works 24/7. It sees pretty much everything you earn online, and it reports it all automatically, without any emotion or bias. So who is it? It's your digital trail. This right here is the absolute game changer for the 2025-26 tax year and beyond. For years, HMRC has kind of relied on you to volunteer the information about what you earn from your side hustles or online gigs. That reliance, it's over. A new system of automatic, direct reporting is here. The new rule behind all this is called DAC7, and its power is just how simple it is. From December 5th, 2025, digital platforms are now legally required to gather up all your earnings data and just send it straight to HMRC. This isn't optional for them, it's mandatory, and it completely rewrites the rulebook. So what kind of platforms are we talking about? Well, the net is incredibly wide. Let's imagine Chloe, a freelance graphic designer in London. That income she just earned from a project on Upwork? Yep, it's getting reported. The cool vintage clothes she sells on Etsy on the weekends? That's reported too. The money she makes renting out her spare room on Airbnb, you guessed it, also reported. Every single one of these platforms is now sending a detailed summary straight to the taxman. Okay, now before you start to panic, here's a quick pro tip. There's an important threshold called the trading allowance. If your total income from all your little side hustles adds up to less than £1,000 in a tax year, you don't actually need to declare it. But, and this is the crucial part, the platforms will still report your earnings. It's then up to HMRC's computers to figure out if you've gone over that limit. And this web of transparency is just getting bigger. It's not just for gig work anymore. Starting from January 1st, 2026, the world of crypto gets the exact same treatment. It's called the Crypto Asset Reporting Framework, or CARF, and it means exchanges will now have to report your transaction data directly to HMRC. The days of crypto being the financial Wild West from a tax perspective, they're officially coming to an end. Okay, so you have this enormous tidal wave of data flooding in from all these online platforms and crypto exchanges. But what does HMRC actually do with it all? I mean, how on earth do they make sense of billions of little transactions? The answer is a seriously powerful piece of technology. I want you to meet Connect. This is HMRC's data matching AI system. And the scale of this thing is just staggering. It crunches through over 600 million data points every single day. It's looking for patterns, for things that don't add up, and all that new data from DAC7 and CARF, it just feeds right into this incredible machine. And Connect doesn't just look at things one by one. No, its real power is in cross-referencing, connecting the dots. It takes the earnings data it gets from, say, Etsy, compares it to the money it sees going into your bank account, checks that against your self-assessment tax return, and even looks at property records. So if you declare, say, £20,000 of income, but Connect sees £50,000 flowing through your accounts, boom, a red flag goes up instantly. So with this crazy new level of transparency, what happens when the system does flag a problem? Well, this is where it gets serious, because the consequences for getting it wrong are now much, much higher. Let's take a look at the real cost of making a mistake.
The 2025 budget also brought in some tougher penalties for paying late. As you can see, you still get a 15-day grace period, which is nice. But after that, the penalties have gone up. The big jump is if you're more than a month late. The penalty rate has more than doubled, from a 4% annual rate to a 10% annual rate. It's a really clear signal. HMRC is cracking down on late payments. But it's not just about paying late. What's absolutely crucial to understand is how HMRC sees your mistake. There is a world of difference between the outcomes here. If it's an honest, non-deliberate mistake, you might face a penalty of up to 30%. But if they decide it was a deliberate and concealed error, that penalty can shoot up to 100% of the tax you owe, effectively doubling your bill. And here's a fact that really drives home this new reality. Did you know that under the Direct Recovery of Debts scheme, if you owe more than £1,000 and you're not cooperating, HMRC now has the power to take that money directly out of your bank account without even needing a court order? It's a powerful tool, and it really shows how serious they are. Okay, I know. We've covered the new informants, the all-seeing AI, the tougher penalties. It can all sound a bit daunting, but the goal here isn't to scare you, it's to prepare you. So let's switch gears. Forget the problem for a second, and let's focus on the solution, the simple, proactive steps you can take right now. Here's your 5-step action plan. First, sit down and review all of your income sources. Don't forget that little Etsy shop or the odd delivery job. Second, add it all up and check it against that £1,000 trading allowance. Third, if you're over the limit, you have to register for self-assessment. 4, and honestly, this is the most critical new habit to build, keep clear, digital records of everything. And finally, number 5, if you are ever in doubt about anything, just ask a professional. It's the smartest investment you'll make. And really, it all just boils down to this simple idea. It's a basic truth, but it has never been more relevant than it is right now. Being proactive, getting organized with your finances today, is the absolute best way to avoid those massive compliance headaches tomorrow. Now, before we finish up, it's really important for me to say that the information we've talked about here is for general guidance. Everyone's tax situation is unique, so please don't rely on this analysis alone when you're making big financial decisions. And that's where the team who helped us develop all this information comes in. For professional, tailored advice on exactly how these changes affect you, or for any other tax questions you might have, you should really talk to the experts. You can reach my tax accountant on 0208-570-8531. Again, that's 0208-570-8531. Or you can drop them an email at info@mytaxaccountant.co.uk. So, I'll leave you with this one final thought. With your digital life now completely visible and HMRC's AI constantly watching, are your records really ready for this new era of total tax transparency? Thanks for joining me.